Isn't it annoying when you buy your position only to see the market move against you? Well, today I'm going to show you how you can consistently buy the bottom and sell the top. Most people say it's not possible, but I'm going to show you a methodology that I discovered a few years back that is so consistent and reliable, it will increase your profits. We're going to focus on three key things: a specific momentum indicator, how to use it in conjunction with Elliott Wave. Now, Elliott Wave is quite complicated. We're going to focus on the 20% practical profit producing Elliott Wave structures that you want to be aware of. And then last but not least is to combine Fibonacci price ratios to specific Elliott Wave structures. Now, the video you're about to see was a private workshop that I created for my private community, people that have taken my course and everything else. It was filmed a little while ago, but it's so relevant. But what I'm also going to do at the end is I'm also going to show two case studies of two recent trades that we've taken, one in gold and one in oil, which will show you all of this in practical application. So it's mechanical, it's objective, it's non-emotional, which means it's a business, and it allows you to create a trade plan so you can then trade consistently. Two main things that we're going to cover today: how to identify a market bottom, and we're going to go into a lot of detail. And then second, how to identify a market top. Now, in reality, is really saying how to identify a wave 2, an ABC correction, and how to identify an end of a wave 5. And the reason I add that caveat in is tops and bottoms, you can reverse them as bottoms and tops, because when you're shorting the market, it's bottoms and tops and so on and so forth. So let's go into some, let me just make this full screen over here. There we go. All right. So the key thing you want to know is markets moving 5s and 3s, right? And around 40, 50, 60, sometimes 70% of the time, the patterns are incredibly clear. Today, we're going to dive into Ethereum as a live example where the trade setup is unfolding in a very textbook fashion. It doesn't mean it's going to take off, but it's highly probable. So we want to trade it with confidence. And today's workshop is the reality of what we're going to do. So here's the theory, and then we're going to jump into the reality. So 5s and 3s. So what I'm always looking for is a market to do some type of impulse and then some type of correction. And the correction is often a wave 2. Wave 2s are my favorite. If we can identify a very clear-cut wave 2 or end of wave 2, then we're in good business. So knowing that wave 1s typically break down to a 5-wave structure, and we're seeing this with Ethereum since I think it was June 18th. We've just had a nice 5-wave structure to the upside, and wave 2s typically break down to a 3-wave structure. Now, again, caveat, the reverse is true for bear markets. So you can just flip it on the way down. So this is true for bull markets and bear markets. We just do the mirror upside down. Hopefully that's clear. So what we're going to talk about today is how to identify a bottom. In this case, we're talking about an end of a wave 2. But again, it will be a top if it was a bear market. And again, we've got a wave 1, an ABC of a wave 2. So there's a couple of things I just want to elaborate on here to really drum this point home. And we're going to go into Ethereum in just a second to do a live version of this. What we want to know is, first of all, pattern position. We want to know that typically markets move in these 3s, but this wave C, not always, but when it does identify or clearly unfold in a 5-wave structure like this, we want to really leverage this information. This is very powerful information because it's telling us how the crowd is feeling and what's likely to occur next. Then we're going to look at some retracement levels, because of how to identify a bottom. You know, if I elaborate on that title, is how to identify a high probability bottom, which is going to do a trend reversal and then a new trend. That's what we're going to look at. We're going to then look at some Fibonacci ratios, you know, the retracement levels and a few others, and then some time factors as well. But high level, this is what we're looking for, right? Time and time again on different degrees. So you can zoom out of the market, and you'll see this with Ethereum. I did a video on YouTube's video today is on Ethereum. Zoomed out, and we see this exact pattern since 2017 to now. We actually see this pattern. When we zoom in, since June to now, we see it more on an intermediate micro scale. And then if we zoom in again on the hourly chart, and we're going to go into it now, we'll see this pattern again. And what we allow us to do is we kind of go like this. This is what, and I'm going to want to get this across. We look for this 5-wave pattern, and then this ABC. And then this part here of the market, let me just do this actually. Bear with me, I want to do it like this. Let me do our whiteboard. All right, this will be clearer. We want to see an 1, 2, 3, 4, 5 ABC, right? A macro. Then we zoom in over here, and often you'll see a new trend unfolding like here. And then that also does a 1, 2, 3, 4, 5 ABC, right? And then we can zoom in again over here, and then there's a new little trend, a 1, 2, 3, 4, 5 ABC. Now we don't need to go in too many times. 3 degrees is more than enough. But when we can zoom in here, what it allows us to do is get in a tight entry, which means we can risk 2%, but the tighter the entry, the more profit potential. The larger the entry distance in terms of from the entry to the stop loss, the lower the profit potential. I know that makes perfect sense to some of you, and to others is like, I don't know what you just said, but it sounds pretty interesting. But should we jump into an Ethereum chart? Let's dive into an Ethereum chart. I think I got it. Did I do it here? We got it here. I think oh, here we go. I put a link in. Oh, here we go. There we go. Here's the link. All right, so we're going to go into Ethereum. A couple of things, first of all, with Ethereum. So we've got a 4-screen setup. I want you to pay attention to the top half, right? And this is going to help us identify the market bottoms and tops. First thing with Ethereum is, what do you notice with the momentum? With the momentum. But if you've taken the courses, the basic courses even, we've got the weekly doing a bullish reversal. What that indicates, and it is an indication, right? It's not a confirmation because the lagging indicator, but it indicates that we may have a weekly bottom on our hands, where the market in terms of Ethereum will likely move sideways to up for a number of weeks and possibly for a few months, right? And that's quite significant. We've also had a bullish reversal on a daily chart. So we've got the higher degree time frame and the lower degree time frame pointing in the same direction. That's a big thumbs up for us. So go, okay, that's a big clue of identifying the bottom. But by itself is not enough. By itself is not enough. So now we're going to go into the chart itself. We're going to go into Ethereum. And what I just want to emphasize, what we were basically talking about in the theory, when I say these patterns repeat again and again on a macro, on an intermediate, on a micro, then a sub-micro, and then you can zoom in and you'll just see these patterns repeat again as they do in nature. This is what was found. These patterns repeat themselves in nature. It's almost like a tree branch branching out into 2, then it branches out into 2 again, into 2 again, into 2 again, and the pattern just repeats again and again and again. So if you look at this in an objective, non-emotional manner, 2017, big correction. 2021, big correction. November 2021, what do you see here? Well, it's a pretty clear 5-wave structure on a macro. How fascinating is that? Right, just from like, it's like these patterns just unfold again and again and again. And what have we seen since November? Well, look at this. First big move down, then a correction, second move up, which is like a wave B, and then another move down. That is just textbook. That's like an A, B, C on a macro scale. Now remember what I said in the theory, we zoom in over here and we're gonna look in at this part of the market. So now let's just zoom in over here. On the recent price action since, was it June 18th? What do we see happen? Well, it's almost the exact same thing that we just saw from 2017 to now, happening all over again, but on a more intermediate scale. So if we look at this, again, just forget it's Ethereum for a second. The buying and selling behavior are 1, 2, 3, 4, 5, and followed by, just like from November to now, A, B, C. So what we're looking at is a potential end of a wave C, of a wave 2, right? This is what we're talking about. So when I jumped into the chart itself with, in fact, let me just, can I go back? Yeah. When I jumped into the chart, I'm going to jump back and forth on this because I really want to get this across. We're going to look into this part of the market, this 5-wave structure here, and this wave 4 high. This is very significant indeed. And we don't want to miss this. Very, very important. So let me just go back over here. So this is in green, is the green part that I'm referring to. Let me get rid of this blue. And I want to refer to this green part. All right, so we were talking about this 5-wave structure to the downside. This wave C looks like a 1, 2. Initially, we thought, by the way, this was the wave C end, but because of how the market reacted as a correction and made a new low, it looks like a nice 1, 2, 3, 4, and an ending 5th wave diagonal. which is, it can potentially be a very bullish sign over here. So now, just to summarize this, and I know I'm covering a lot, but I just want to, because this is everything. This is everything that we're doing that's going to allow us to see what others can't see. Is we got this nice A, B, C structure. We've got a 78.6% Fibonacci retracement, which is the typical maximum. We've got some end of wave 5 targets with Fibonacci ratios over here as well. But what we've also got is this 1, 2, 3, 4, 5 of a C. There's 2 degrees of wave counts telling us that this is towards an end. Trading the markets is a business. And if you want to make money in the business of trading, you need to have a plan. And if you fail to plan, you should plan to fail. So you need to develop a trade plan. To help you on your journey, I've shared my personal trade plan in the link below. It covers the 4 elements of the markets: momentum, pattern, price, and time. But more than that, objective entry strategies with a checklist, which keeps it mechanical and objective and non-emotional. Take these key ingredients that I've learned over the last 15 years, adapt it so it suits you, and then take your trading to the next level. All right, so I wanted to now just touch upon some time ratios, right? So time, we have the, again, it's the Fibonacci time course, but what you want to know is as we can measure time, so price ratios, we can do the same for time ratios. More often than not, again, this is a bit detailed, but it's really relevant. More often than not, corrections end between 38.2 to 62% retracement. You go, Jigga, speak English to me, please. All right, the length of time it takes for this 5-wave structure to form, the length of time, if we take that length of time and then project forward, 38.2, that's what this is, and 62%, this is typically where most corrections end. You might be thinking, well, Ethereum's gone past that. So how you want to think about it is when a market goes past the typical maximum time, it means it's at its time extreme. So a reversal is due. Doesn't mean it owes us anything. It doesn't mean it's going to happen. It's just highly probable. And then the typical maximum is this 100%. So the length of time it takes for this low to this high to occur, we project that forward, and this is the 100%. And we can see we're just beyond that. So that's a big clue also. So now we've got double time frame momentum. We've got 2 degrees of pattern count. We got Fibonacci ratios. I haven't gone into too much detail today, but it's retracements, external retracements, and time. So you go, okay, Jigga, but how do we make money from this? How do we really make money from this? So let's just set some trade expectations first, right? Because a thing that most people find incredibly difficult with trading is the paradox of trading. It's very different to most activities in the world, most sports in the world, or most just business in the world, is you have to be able to be comfortable with knowing that 40, 50, 60% of the time, the trends are not going to unfold as anticipated. And you have to manage your trade with that in mind. So when I see a 5-wave structure on the upside, what I like to write in to really keep my mind really clear is a wave 1 or A. Because even though we're likely to get at least one more leg to the upside, we don't know right now if it's going to be some type of correction or if it's going to be an impulsive wave. Right? We just don't know. The probability is going to be impulsive, but we just don't know. And it's best practice to assume actually not to assume, just write what it could be. Because wave 1 or A's and 2 or B's, they look identical. Like if I just looked at this and you just said, Jigga, what does this look like? Without taking the context of the rest of the market position, I just go, it looks like a wave 1 or an A. Well, which one is it, Jigga? I go, I don't know. We don't know, but we don't need to know. We can trade it because we can make money on a wave C and we can make more money on a wave 3. At the time of making the decision, we don't actually know which one it's going to be. Wave 2 or B, I often like to put in a question mark here just to remind us that it has not been confirmed. So we go, okay, so now let's just set some typical trade expectations. You go, okay, how do we do that? This is going to come into play because we're still focused on identifying the bottom. And then this part, I'm kind of preempting identifying the top and why it's important. Because if the trend takes off, we don't want to take profits too soon. We want to allow the trend to unfold and take profits in a logical, mechanical, non-emotional way in a business-like manner. that allows us to trade like a casino that has no emotion. Or even if it has emotions, we can manage our emotions in a mechanical fashion. So what we want to do is know that the low to the high, this low to the high, the next move to the upside is normally has a relationship to the wave 108, right? And that's what we're going to look at. So what I'm going to do, I'm just going to take the low of the 108 to the high of the 108, and I'm going to project it from the bottom over here. So what we want is the three ratios. We're going to have three ratios. You got three ratios. What are the three ratios? 100%, which is represented by the number 1. 162%, which is represented by 1.618. That's the Fibonacci golden mean. And 2.618. And I'm going to explain this to you. And this is going to really tie into the second half of this workshop, which is how to identify tops. But in a bear market, it will be the reverse. So why are we identifying three targets? Well, at this moment in time, first of all, we don't know if any of them are going to be hit, but it's likely they are. This would be a typical wave C, 100%. This will be a typical wave 3 and a maximum wave C. At this point, we don't know if either of them are going to be hit, but even if it unfolds, we still won't know at the time until, because it's hindsight. In hindsight, it's easier to see. But now we have to use leading indications to make a business decision today based on what we believe is likely to happen in the future. And then an overextended wave 3 is this 2.618. Right, that's it. So it's the minimum that we expect, either a wave C, so the minimum either way, because if it's a wave 3, we expect it to break this. If it's a wave C, we expect it to hit this. Typical wave 3, maximum wave C, and maximum wave 3 as an overextension, right? So I'm just going to do one more thing to identify the bottom, because we want to make money from the market. So now we have to really go, all right, so what we did from 2017 to now, you saw the big wave count. We then zoomed in and we did the exact same thing, but we're going to do that one more time. That's right, we're going to do it one more time. But I love this stuff, right? This fascinates me. We can do the exact same thing on this part of the market here. We've had this move up, and we've got this initial move down. But on a daily chart, we can't see any wave structure because there's only 1 bar per day. But in an hourly chart, we get 24 bars in a day. And we can see the buying and selling behavior on an intraday level. So now we're going to apply the exact same thing. So when you hear me say our methodology, the 4 secrets to make money from the markets that you must know, apply to all markets and all time frames. And when I say time frames, we're on a daily chart right now, but now we're going to go into an hourly chart, right? So we're going to pop out of this and go into an hourly chart, which I keep in the bottom right hand corner. And now I'm going to zoom in to this part of the market over here that we just looked at on the daily. And at the moment, this is live data, right? It's unfolding just textbook. What do we notice? Well, we notice this 1, 2, 3, 4, 5 wave structure and an A, B, C. So when I did my YouTube content this morning, it was around here. And what I said was, this doesn't look like the end of a correction. Why? Well, it hasn't met the minimum 50%, first of all, and it looks like an impulsive structure. So I said we should anticipate some type of wave B and another leg to the downside. And it looks like we are now getting that leg to the downside. And I said in the video, if we go past this point down here, we can do a bit more analysis over here. And that's what we're going to do, right? So now, this is starting to look like, it wasn't here this morning, so I'm just going to unfold the data. It's starting to look like some type of potential 5-wave structure. Not confirmed yet, but this is live, right? This is, we're not backtracking data now. We're literally doing it live. Now this is live as we speak. This is the price literally right now. So what we can do now is we can do some really cool things in terms of price. This is really now going into the detail on how to identify bottoms. We're going to measure this wave A, the high to the low, and project it from this potential wave B. And there's 3 main ratios. The 100% is the main one. This is the main one over here. That's the most common, most typical. 62% is the minimum, and 1.618 for a wave C is the maximum. And what this does for us, it gives us really 3 zones. And I'm gonna break them down. We got this zone over here, which we can really narrow down to over here. We've got this next zone over here, and we've got this extreme zone down here. And what typically happens with Fibonacci price zones is if one gets exceeded, it typically goes down to the next. And it's almost like a magnet. If it breaks this, it'll typically go down to the next, more often than not. But it's highly probable that it's probably going to be this one because of this 100%. But what can also help us is a couple of other factors. We're going to measure how long did it take for this wave A to form. We're going to project it from this wave B top. And the number that I want, you'll see this in your Fibonacci time course, is this 100%. And you go, well, I can't see any new line. Well, the reason for that is it's overlapping literally by the hour exactly on this line over here. So if you see this, it's actually over here, not this one. It's literally this over here, this line over here is overlapping. So this tells us that we are very likely to see the end of this particular move to the downside by 12 p.m., 12 to 1 p.m. today, potentially, right? And if it unfolds to a 5-wave structure, so we've got this 1, 2, 3, 4, 5, obviously, then we can look for a long trade opportunity. And that's in the entry to exit course. We can go long on a swing high, we can go along on a swing high of a wave B, we can be more patient. There's multiple ways of going long, but really now we have fine-tuned the bottom. And I'm hoping that's making sense. We have fine-tuned the bottom. Do we know it's the bottom? Well, no, because this is live data. We don't know anything can happen. The market owes us nothing. But what's likely to happen is that the market is likely to react to this level. If we just pull up a momentum indicator, we can look at this momentum indicator over here and go, okay, we've got a bullish reversal. We're probably gonna get one. We're probably, what's the time now? It's like 11:15 or so. Maybe 2 hours away from the bottom, potentially, of a major bottom that could go on for weeks and months. And if we get a nice tight entry, that could serve us really, really well. This low and this low married up relatively nicely. This one was a bit choppy, but I'm just looking at how good is this indicator at marrying up the bottoms. It's not bad. Like when the blue line goes over the red, it's pretty much in line. So we should see some type of reaction. So I'm gonna cover one last thing here because I think it's important. Because this is what we're gonna do. Because we're looking to trade. I've been waiting for weeks for this trade. Waiting for, we've been shorting it, doing little bits here and there, but this has been a major trade setup that we're waiting for. If I manage to get in a really tight trade based on the green wave count, which is here, I'll call it the green wave count. Maybe see if I can get this here. This here, 1, 2, 3, 4, 5. I will use this information to get risk-free, ideally within 24 hours. So we can trade in a way where we can risk our 2% and get risk-free relatively fast. And I cover that in some of the other trading. So now let's just pop back into the lesson. So that's what we just covered. So this is the theory, and now we just did a detail on a macro, on an intermediate, and then we went right down to the micro on an hourly chart. But hopefully you saw that it was the exact same methodology because it's just bars and human psychology playing out. And it's the same thing on a macro, intermediate, micro, sub-micro, and so on and so forth. That's why you can use this on a day trading methodology or strategy, whether you're looking at 5-minute, 15-minute, 1-hour charts, or if you're looking at weekly, hourly charts, or daily charts, you can also do the same. Now we're going to talk about how to identify a market top, because ultimately we want to make money. And that's literally what this is about. Let's call it a spade. We're trading to make money. We're reading lows, reading highs. We want to buy low, sell high, or sell high, buy low if we're shorting the market. So again, what we want to understand is the market moves in 5s and 3s. We want to use Ethereum as the example. 1, 2, 3, 4, 5, ABC. But then a wave 3 typically also breaks down to a 5-wave structure. And you want to know this. But what we're going to do now is we're going to go back into an Ethereum chart. And I'm going to do two things. But the main thing I want to do, and I'll just observe time if we've got enough time, is I'm going to take the data back to this point, and I'm going to show you with Ethereum and all other markets how we can identify if the market is making a wave 5 top and how we should then tighten our stop losses. I also just want to note that we never know when the top is going to be, right? It's one of the strategies that we use is not to exit at a physical point. So we don't say, if Ethereum hits $3,000, exit. What we do is we say, if it's hitting our typical wave 5 targets, we want to start trailing our stop loss, but allow the market to stop us out. Why? Because often, especially in crypto, especially with wave 5s or wave 3s, sometimes that last wave can overextend, and wave 3s can also overextend. And we don't know when they're going to overextend because there's multiple forces at bay that we don't have control over. So we want to be in the market when it does. And 5-10% of the time they overextend, and you make a ton of money when it overextends. So we don't want to take profits too soon, but we want to have a logical, mechanical way of locking in profits. So now let's go into the chart again. Let's have a look. Okay, I'm going to go back over here. So I'm going to pop out of here. And now let me go back to the Ethereum chart. All right, so we're going to go into a daily chart. And what we're going to do is here we are going to backtrack. We're going to just take the data back. TradingView is brilliant. There's this button over here, if you haven't used it before, called replay. And what replay allows you to do is take the data back and just test out your strategy. And sometimes it's just fantastic for practicing. And that's what we're going to use today. We're going to press this button, replay, and it says, where would you like to cut the data off from? And that's what we're going to do here. And then we're going to zoom into this part of the market, and we're going to focus on this to identify the end of a wave 5. I'm going to take it a bit further back. Let's give it a second. All right, here we go. So what we've got over here, this is so important. The hardest skill is actually easy to do, but hard to execute because of human emotions. And if you don't have a trade plan and you're not exercising a trade plan, then this is almost impossible to do because of your emotions. Should I sell? Should I hold? Should I buy more? That's 3 questions on the same position. And I get that all the time. Like literally, let's just say Ethereum's doing this. What you will find emotionally, and this is what we're measuring, by the way, how you're feeling is what we're measuring. What you'll find, we know that this is the top, right? We know that, because we're backtracking the data, we know this. But what you want to know is wave 5s is a Hopium wave. It's the lottery ticket wave. It's that thinking where either you're already in the market and people feel, wow, I want to buy more. I don't want to sell because this is going to the moon. I'm going to be able to retire tomorrow kind of thinking. And also, it catches a lot of people out. People didn't buy, and now it's pumping over here in the last part, and they go, man, I'm not missing this. And then they start buying, and then the market tanks. So what I'm about to teach you and show you allows you to be on the other side of the fence, which is the 10%, 5% that win, that understand this psychology and goes, okay, this market is getting overheated for where it is right now. The amount is moved up. A correction is due, right? A correction is due. And what I'm about to show you is in all time frames, right? So first, what we're going to cover is the pattern, right? We can keep it quite simple on the pattern. What we've got is a clear 1, 2, 3, 4. Therefore, we are anticipating a 5. How do we know we're anticipating a 5? Well, this high has been exceeded. So now we can start going, right, we're anticipating the end of a 5-wave structure. So now we can start going, right, we're coming towards the end. Now in this scenario, we know where the end is because we've backtracked the data. With our current stuff, when we go long on Ethereum, and if it unfolds, we don't know, but we're going to apply the exact same principle. So that's number 1, pattern position. The momentum will really help as well. The weekly momentum and the daily. So let's just look at what the daily momentum was doing. I'm just going to unfold one more bar. You can look at the momentum over here. You can see it's at the top part. So we go, okay, the momentum like here and like here is also indicating we're probably going to get a top. So we've got pattern and momentum indicating a top. So that's 2 clues, 2 big clues that we're going to probably have some type of top. All right, so now we're going to do Fibonacci, right? This way just go to a whole new level. There's 3 main ratios you want to do. The simplest out of the 3, something called an external retracement. And it's the relationship between a wave 4 and a wave 5. Very reliable, very consistent. And what we simply do is we take the retracement function on TradingView is called Fib retracement. We take the high of wave 4 and the low of wave 4. So the high of wave 3, which is the beginning of wave 4, and the low of wave 4. So basically this high and this low. And the two ratios that we want is 1.272 and 1.618. That's the most typical wave 5 extensions. And we can see we are in that range. So now, all of a sudden, we've got a big clue. We've got momentum, we've got a 5-wave pattern, and we've got an external retracement where we're at the 1.618. So now, it's like all about tightening your stop losses. But I told you there's two others. The two others are the wave 1 to 3 to 5 relationship. What'd you get? Okay, wave 1, beginning of wave 1 to wave 3. We're going to measure that. And then we're going to project certain ratios from this wave 4 low forward. And the two key ratios are 38.2 and 62%. So we got wave 1 to wave 3. We're going to measure and then project it from wave 4. And the two ratios that we want is 38.2 and 62%. And we can see we've got that range over here. And then what we want to note, and I'm going to do this at a decent speed, is when wave 3, I'm going to measure wave 1 here and project it from wave 2 and just use the ratios of 1.618, and you'll see why, and 2.618. In fact, 2.618 is not relevant. When wave 3 hits 1.618 and has just gone beyond, this is clearly an extended wave. When that's the case, more often than not, wave 1 and wave 5 will practically equal each other, give or take, right? And that gives us a big clue. And that's going to be the third, and the tool here is called trend-based fib extension. That's what it's called. Different softwares call it different things, but on TradingView it's called fib-based trend extension. So we're going to measure wave 1. And by the way, the reason I'm doing it on the right is so the lines show on the right. We're going to project it here, and the ratio that I want is 100%, and it's in red. You see that? So now what we have, and you can do this in advance. This is the cool thing about this. This is the minimum level and the maximum level. We got a 5-wave count. We got momentum that we can see over here. And now what we will do, let's just say we're long on this. Let's say this is the wave 3 that we're looking to trade on Ethereum, and this is the 5-wave structure, and it's unfolded. And we are practically at this point down here, and we're looking to trade all this. Let's just say that was the case. What you'll do is when you're coming towards the high probability end of wave 5 zone, you can just trail your stop loss on a 1-bar low. So you literally just go, right, here's a 1-bar low. Let's just make it red so it's really easy for us to see. Hopefully it's easy enough to see. And then we move it to the next 1-bar low. So now this is the current 1-bar low. And we just unfold the data, and it hasn't stopped out. You go just on this 1-bar low, the market goes higher. You see, we didn't know it was going to go higher, but how it's gone higher. So then the next day, you just move it higher again. And then on that bar, you would have got stopped out. And there you go. And then the market, let's just see what it did. We got the bearish reversal down here. You can see the bearish reversal down here. We got the wave 5 pattern. We got the ratios. We haven't done time. There are some time factors. We're not going to do that today. And also so we've got momentum pattern and price. That's more than enough. And then if we look at it, that's what it done. Now I'm just going to quickly just show you one last thing, but I'm going to do it quite fast. Remember I said the reverse is true for the downside, where the tops become the bottom and the bottoms become the tops. I'm just going to quickly show you this. Excuse me. Let me just show it to you like this. In fact, I'm going to do it like this just so it's easy for me to do. And I'm going to show it to you like so. This over here is a 1, 2, 3, 4, 5 of a wave 1 or A. This is an A, B, C of a 2 or B. Right, so you see the similarity. Over here, when we're looking at this, it was on the way up. If you use the mirror, it will just be the exact same principle, but on the way down. So when we're looking at this, we did the same thing. identify pattern, price, time, and it told us, you know, there was a ratio in price, there was a ratio in time, we had momentum, we had an ABC pattern, and we said, right, we can go short on a 1 bar low with a stop loss up here, and then the market nicely moved to the downside. Right, so you can apply the exact same thing. So there you have it. I think that was everything with our workshop today. So you got 5s and 3s, tops and bottoms, and there you have it. I hope you got massive value from that workshop. Here's the 2 case studies that I want to share with you. Recent trades that we've taken that are likely to be highly profitable, currently running in an open profit. So with gold, this is the gold chart. We've had this nice wave 1, wave 2, wave 3, wave 4, wave 5, followed by, guess what? A clean ABC correction. We went long on this 1 bar high, stop loss below this low, and we've had a nice follow through. Looks like we're having a mini correction, and we're more than likely going to see another follow through to the upside, again making substantial profits. So what I want to quickly share with you is how we took this trade. So the first thing I would have done was I did a retracement, Fibonacci retracement, and we can see that gold is in the 68 to 78.6% retracement zone. That means it's highly probable coming towards the end of a trend. We've got a bullish reversal on the momentum indicators. There's a few other factors as well. There's one other key ratio that I was really paying attention to. Let me just share it with you because I think you'll find it valuable, and you can apply this to all markets and all time frames. It's where wave A, and we measure wave A, and we measure wave C, is that there's a key ratio. The typical is 100%. We want to be aware of that, but the minimum is 62%. And what we can see over here is it coincided nicely with this particular area. So there was a massive high probability that we're going to have a follow through, and we're probably going to see a big move. So this is probably going to be a nice profitable trade for us in the medium term. Another quick thing to note is this bar here closed higher than the previous high or previous day's close. That's an early signal of a reversal. It's called a reversal day. And that was another trigger for me to place the order with confidence. I'm going to hold it through here, and then if it does follow through, we'll move our stop loss to this swing low. Second case study I want to share with you is oil. Now we actually went short on this just the other day, but the key thing I want to identify was the end of a 5-wave structure. So we had this very clean 1, 2, 3, 4, 5. Now you'll notice that it applies to crypto, it applies to gold, it applies to oil, it applies to stocks, it applies to all markets and all time frames, because we're talking about crowd psychology. And what we had here was some key Fibonacci ratios. So we've got pattern position on multiple degrees, so that's a big thumbs up. We've got momentum in our favor. We've got these bearish reversals where the blue line has gone below the red. And let's just quickly draw in some of the key Fibonacci ratios that I was looking at. One of the key ones that I look for time and time again is the external retracement. This is so reliable for an end of wave 5. Now it's not exact, but it gives us a good indicative feel for where the price is likely going to get to. And as you can see over here, this was indicating to us when the price was in this zone that it's gone beyond the typical extreme of a wave 5. Let's just do the other one key one, which is an alternate time price projection. It's going to measure wave 1 to wave 3 and project it from the wave 4 low. And the key ratios that I'm really looking for is the 38.2 and the 62%. And the 62% is the most relevant. And I'm just going to show you this over here. This big green line. So we can see it coincides with the other ratio. Now this is very significant, especially when the other factors are in play. Momentum, pattern, price. We're not looking at time right now. We've got a reversal day bar. We put in an order and we've had some nice follow through. So what's likely going to occur after a 5-wave move to the upside is a 3-wave correction. So there's plenty of room to make good profit on this particular trade, and it's more than likely going to play out. Now we don't know how it's going to play out, but we're currently short in this market. But there's a high probability that this high will not get exceeded, and this follow through will happen to the downside. So like, subscribe, hit the bell notification. Hope you enjoyed today's content. Subscribe to the channel. There's going to be plenty more education, because I want to just give you the tools so you can read the markets and position yourself on the correct side and maximize, so you can buy the bottoms and sell the tops. And remember, you can short the market as well. So when we see a clear 5-wave structure like this, we can position ourselves on the short side to make money as the markets move down. I also want to just share with you my trade plan and my business plan, which you can now actually download for free. The key thing with a business plan and trade plans is it doesn't guarantee success, but the lack of one does guarantee failure, because you want to have mechanical objective rules that one identifies an edge, but then how you're going to execute upon that edge. Now in this particular trade plan, I cover the details of momentum, call it double time frame of momentum. It's a very, very strong filter that it's like the minimum criteria I look for before entering a trade. Second is I look for Elliott wave patterns, in particular end of wave 5s and end of wave Cs, the A, B, C corrections. Covering quite a bit of detail, the key rules and the guidelines that you really want to be aware of and how you can really apply those in a practical fashion. And then we cover Fibonacci price, the key price ratios that you want to be aware of, how to apply them, and the key rules and zones that we're looking for. I got an extra bonus for you, which we didn't cover in the video today, Fibonacci time. And then I've just added in a few reversals that you want to be looking for, a summary of the executive summary, how you can just use this information. And then last but not least, I've included a checklist, the key things to make sure they're in play before you take the trade. So you can download that free, is in the link below.